What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvidia, the QQQ, and a couple of other tickers. I'm going to break down why tomorrow is going to be an absolutely crazy day as we have loads of option expirations. We have quadruple witching, which may cause a lot of volatility, not to mention new developments involving the EU and President Trump. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. Deposits $2,000, you're guaranteed 30, not to mention 8.1% APY on invested cash. The offer ends at the end of March. Anyways, let's talk about what's happening with this market. So I just want to mention that the market's in a very, very interesting range right here. Ever since FOMC and Jerome Powell gave a speech yesterday, ever since all of that happened, we saw the market basically dump and pump between a range, and the range remains right now. So SPY dumps to about 562, bounce back up to the 570s, back down, up over and over again. About 4 times we bounced between 562 and 570, showing that we're just range bound. Now we need to see SPY break and hold above the 50 EMA at the 568.58 area. If we close above that, we're going to be more bullish. If we end up losing, okay, 564.5, we could turn back down. If we close up below that, it's going to be a bad sign. So the question is, will we break past this? Will we see a rejection? I do want to mention that if you look at SPY, we had a low down here at 549. We came up, made a higher low. So for the time being, the chart is a bit more bullish as we're trying to uptrend, and we're also holding this trend line technically. So there's a chance that SPY does continue this uptrend if we hold support. But I'll break down the factors involving tomorrow, then I'll talk about what's going to happen with the charts. Let's first talk about this. So what happened? Yesterday, the market saw a very, very nice face ripper as we saw a lot of buyers step in after Jerome Powell gave his speech. And then today we saw a consolidation day. So could that be because we're about to see a big move tomorrow? Typically, one pattern you'll notice is that when we're red on Thursdays, we tend to be green on Fridays. And when it's vice versa, the opposite tends to happen. So hopefully this does lead to something a lot better, but that's going to need confirmation first. Today, the market was very flat in terms of finance and health technology. Tech was very flat as well, with some red here and there. But overall, it wasn't really enough to help our ETFs, and that's why we saw SPY and the QQQ in the red. Now, heading into tomorrow, it's going to be Friday, March 21st, a very important day. We just have one Fed speaker known as Williams, and that's pretty much it. But what's very important is the option expirations. So we have a little bit under 2 million of these expirations tomorrow on the call side. So 2 million calls expire tomorrow. And we have over 3.9 million of these puts expiring. In total, that's going to put us at about a 2.05 put to call ratio, right? We have almost 4 million puts and almost 2 million of these calls expiring. Basically, there's actually 2 puts for every call expiring, and 580 happens to be max pain. We're currently 2.4% below max pain, so keep that in mind. So what does this mean for the future? Well, honestly, guys, with all of these shorts expiring, the market makers, the people that make money when we lose money, basically, they're the ones who are going to be having alternative motives. So in this case, is it more beneficial for them to pump stocks? Are they going to try to squeeze shorts? It depends on what they want to do. If they want to cause a mega short squeeze, they could try that to kind of screw over these puts. There's a lot of puts expiring, so it does make sense for them to try that. But then simultaneously, they could do the opposite, and they could just continue to cause us to chop around to hurt these options. So I think that's what's going to most likely happen. Either we chop around or we see a big move to the upside. I think with all these puts expiring, I don't think it's as likely for them to kind of dump the market very hard. But I do favor either like shop or upside for tomorrow based off this. We'll see just to be safe, though. We obviously need confirmation to see if the market's going to run more. But that's what I'm seeing for now. Going back, the market is still going to be impacted by Jerome Powell. He said some very important things. Some things he said were bullish for the stock market, such as the fact that the Fed is anticipating more cuts than previously expected. But some things he said were quite bearish, especially because of the fact that we're expecting another surge in inflation under the new tariffs, not to mention a big shift in policy, right? So he's saying that the tariffs alone are not going to be the thing that dictates the Fed's policies. It has more to do with what the reaction is and what we see from the charts after that. On top of that, Jerome Powell did mention that we could see another increase in inflation for the short term, but the long term remains bright, and he thinks the labor market is going to be fine. So he said very, very mixed things. The market is seeing like bounces and dumps back and forth. And then I also want to mention there's a lot of uncertainty about the new policies. So just keep that in mind. And then on top of this, The Bank of England is also leaving their interest rates unchanged at the benchmark 4.5%. So they could be following Powell on this. There was some good news, which is part of why the market bounced. So the European Union is delaying the implementation of their first set of tariffs on goods from the US until the middle of April. This is a big update, and this is going to once again delay potential price increases. Pretty good news so far, and that's why the market did see a bit of a push that also contributed to some extent. Lastly, the thing involving President Trump is the fact that, well, he's been going on about his reciprocal tariffs. He's very excited about April 2nd, which is when he's going to be making those announcements. But before that happens, right now, Trump is now focusing on a potential peace agreement between Russia and Ukraine. We've been seeing a lot of negotiations between him and Putin, him and Zelensky trying to talk it through. And it's worth mentioning that they're actually talking about the proposal to take over a nuclear plant. So there's a lot of things that are involved in this, such as like the fact that Russia wants Ukraine to kind of decrease the size of their military. They're asking for them to accept a bunch of land and just a bunch of different things. So there's a lot of stuff going on, guys. I just want to be very honest about that. So we're waiting to see how this ends up developing. For earnings, we got Nike and FedEx today. Tomorrow we have Neo and a few others, some small retails. Nike had a beat on EPS with 54 cents above above expectations, and the revenue is at 11.27 billion above expectations. But the issue is that we saw their margins go down by about 3.3%, and then their overall net sales and wholesale revenue also fell 12 and 7%. So not the best of news. That's part of why the share price is down with those margins decreasing a bit. They did not give guidance, but despite that, the share price is still down. The market's still at extreme fear. We'll see if we end up approaching like just fear. Momentum is at extreme fear as well. We'll have to see if that changes. The put to call option ratio is dipping right now. Once again, we're starting to see a little bit less shorting than before. The VIX is approaching the 50 daily moving average. We're not that far from it. It's currently around that like 18.65 area. So we'll see how that goes. And that's all I'm seeing for now. So just be very, very patient nonetheless. Anyways, as far as the market goes, I want to say that for SPY, I like the fact that we're trying to ride this trend line up. I think that's a good sign. However, the thing is, we need confirmation first, and that's why you always want to be open-minded. So what's good about the chart for the bulls is this. There's an unfilled gap at 575. And then if you look at the last couple of weeks, we were on this downtrend, and then we completely flipped the book. We completely flipped. We made a low right over here. Now we're trying to make higher highs and higher lows. So the trend is technically more bullish, and we are favoring this, at least based off that, for more higher highs and higher lows. Now, the trend is more bullish. However, when you look at the daily time frame, what you'll see is that we're looking a little bit more bullish. We need to get a close above at least 568.8 on the 200 EMA. So see the red line above. I know it's a little bit hard to see. You want to close above that, and that's going to be looking more bullish. If we can't do that, it's not going to be a good sign. We have gotten above it, but we haven't been able to hold above it for close. I'm going to be watching for that just to be safe. But it's very simple. If we can't hold, or if we close below 564, there's going to be the risk of the double top like scenario. If we lose this trend line, then we could be revisiting this low over here if we get a rejection. So 564 fails us. I think we dip all the way down towards like 559. And if that fails us, we're even more bearish. So that's like the more bearish case. Okay, so keep that in mind. The bullish case is going to be that we continue to ride the trend line. We make a higher high, higher low, higher high, and higher low like this. We just continue to squeeze. That's going to be most likely what's happening, at least thus far. My gut prediction, however, is that I think what's going to happen is we kind of like start a little bit weak here, and then we see like a rip to the upside, consolidate, and we just continue to ride this up for tomorrow. I think we try to go for that 575 gap fill, and we'll have to see if we could close above that or not, if we could hold. If that breaks, then 580 is coming next. So we'll see if we get some kind of like face ripper to the upside. The reason I do favor that a little bit more is because of what the trend is suggesting, the fact that there's so many puts expiring. We have almost 4 million of these puts expiring compared to under 2 million of these calls expiring tomorrow. That's very, very important because that suggests that, it's more advantageous for market makers to try to squeeze them up. If the market dumps tomorrow, then a lot of these puts are going to be, the market makers have to like pay off these puts, which I don't think they really want to do. So my bias is a little bit more in favor of either we like consolidate around this range or we just pump. So I think upside is looking more probable on the chart, and we're favoring upside for now. And I think we're going to see a market-wide squeeze. I could be wrong, but that is what I'm predicting, at least thus far. For the QQQ, we have something very similar going on. So you'll see that we're also trying to ride this trend line up. It's forming higher highs and higher lows, at least technically. We have not been able to crack past this 485 area, but if you guys look at the yellow lines here, so let me draw out two yellow lines. This is forming a bullish wedge. I know this one's a little hard to see. Look at this yellow line up here. This is like a bullish wedge, and this typically will favor upside if we get a break out of this. So it looks bullish overall. Now, if you're bearish, you want to see this thing lose essentially this like 478 area. If that fails us, we're going to be dumping to 474. What I like is the fact that we're making higher highs and higher lows, and we have this imbalance to fill over here, taking us up to about 492. So my suspicion is that, before we were making lower highs and lower lows, now we formed a bullish divergence right over here, and this is going to be our base. For now, we're making like a higher high, higher low, equal high, higher low, and we're continuing to do this until we eventually try to break out like this. That's what the chart is suggesting for now. So we have an imbalance over here on the 4-hour time frame. The daily also shows that we have this like there's a gap over here. We also have this imbalance. So I think that we might be trying to go for a higher low, and we might be attempting to pump tomorrow if we hold above our key levels. So hold above 484, then we're looking for an attempt to get back up towards 490 plus. If we end up losing 478, then I'm going to be looking for a downside move, but I'm favoring the upside. I think it's more likely we try to go for that 485 target. If that breaks, we're looking for a squeeze back up to the 490s. I think it's very possible for the QQQ to do that. For the Russell 2000, we have like an inverse head and shoulders like structure. If we break past 207, we're looking for an attempt to get back up to about 210. If we end up losing 204, we're looking for a dump back down towards 202. My gut tells me this tries to form an accumulation. We try to go a little bit higher off this inverse head and shoulders. So as long as 204 does not break, we could be pushing for 208, then 212. For ES, we're looking bullish. We have a left shoulder, a head, and then a right shoulder. If we could hold 57.16, we're going to likely continue to uptrend for 5,800. If we lose that, we could be tipping back down to about 56.60. So we'll just have to see how this goes as we're trying to make higher lows. But watch this trend line. If we could hold this, we may continue to uptrend for the 5,800 area. I think there's a very, very good chance we try to go for that, especially because of this gap over here. We could be trying to fill this gap around 58.25. So with that being said, we're making higher highs and higher lows. I think there's a good chance we try to continue to uptrend, and 5,800 becomes a very, very strong possibility. For NQ, we're looking pretty good. We're making higher lows right now. I want to see us hold this yellow trend line. If that holds, we could be looking for 20,000 plus as our potential target. If we lose this, we could be dipping to about 19,600. I just don't want to see us lose that. I want to see us hold like 19,800 at the very least. And that's going to be a good sign. So this is also kind of like looking at this imbalance over here, forming a double bottom. So we have like this double bottom that formed like this. And then as we're making higher lows, we're going to continue to form a wedge. And that could lead us to continue to push into the 20,000 plus area. So watch that very closely. But for now, like I said before, we're looking quite good off this bullish wedge, and this could be favoring an upside move for us to try to continue to push. So I still think NQ looks more bullish. Bitcoin is in the middle. I'm completely in the middle with this because it depends on if we could hold 84,000. If that does not hold, we could be dumping to about 81,500. That could be coming if we end up getting a rejection. If this holds, we could continue to uptrend for about 87,000. So we'll just have to see which way it goes. But for now, we're doing a good job as we're making higher lows. So watch to see if we get that bounce. And I think we're doing a fantastic job. For Nvidia, I think we're doing a good job as well. We have a potential left shoulder, a head, and then a right shoulder forming. However, we need confirmation because although we're holding above our EMAs, we need to see this low hold at the very least. If we lose 114.8, I'm going to be concerned about Nvidia. This could be dumping to about 111 if that's the case, right? So if you lose this low over here, if we end up like coming down, and if this low fails us, then we're looking for 111. That's the bearish case. The bullish case would be us holding above 117.9. As long as that holds, we're looking for an attempt for 123 pretty easily. My gut tells me that this is like an inverse head and shoulders. We're going to be going for that 123 to 125 target. But just to be safe, we need confirmation, so just keep that in mind. For Tesla, it's in the middle, very, very stuck in a wedge. I'm not really seeing much going on with this until we see a break. If we get back above 242, we're looking for an attempt to push for 250. If we end up losing 228, we could be dumping. I think we're just completely flat right now, not really doing much. If the market consolidates or pushes tomorrow, maybe we see some consolidation like this, an attempt to push for like the 240s. But we're still range bound, so just give this some time to develop. For Apple, We're in the middle as well. I'm not really a big fan of this price action. Looks kind of bearish. It could be looking for like 212 before it tries to bounce. Lots of bad news has been coming out. If this excuse me, if this could hold above 215, we're looking for an attempt for 220. If we end up losing 212, we could be dipping back down. We're making higher lows, so I think that 215 could hold for a nice bounce to the upside. I'm going to go for a speed run for the rest of these. Netflix is holding support as we were talking about. If we could hold 950, we're looking for a bounce for 980. If we lose 938, we're turning back down. So we're making higher lows so far. I think there's a good chance we try to rebound. For MSTR, MicroStrategy has a double bottom. If we manage to hold above 304, we're looking for an attempt to push to about 323. If we end up losing 285, we could turn back down, especially as we have this gap over here in the 260s. This double bottom is looking pretty good, but I want to see us hold above 304 to push higher. So watch and see if that ends up being the case. For Celsius, we're doing a good job as well. We have a nice accumulation-like structure. If we hold above 30, we're looking for a bounce back up towards that 34 area. If we lose 28.6, we're going to be a bit more bearish. So I think that we're kind of weak here. It could be revisiting the 30, and we'll see if we bounce off that. But I do see a little bit more downside for 30. So be careful. Supermicro is kind of flat here. We're trying to make higher lows. As you guys can tell, we're trying to bounce off this trend line. If we break past 40.6, we're looking for an attempt to get back up towards 42. If we lose the support, we could be dipping back down towards 36. Overall, it's still a bit more bullish. For Palantir, we have a left shoulder ahead than a right shoulder. As long as we're above 85, we're looking for an attempt to push for 92. If we end up losing 82, we could be dumping to fill this gap. I like the fact that we have an inverse head and shoulders right here, so it's still technically looking a little bit more bullish, but we need confirmation. It should be a break above this 90 area. So if it does kind of dip here and hit 90 tomorrow, we could be looking for an attempt for 96 very soon or above. So there is potential in Palantir. We'll give it some time for confirmation. Rivian is looking kind of weak. We could be dipping closer to about that 10.65 area, and we'll see if we bounce from there. I want to see it get back above 11.2 to remain more bullish. We're kind of weak here, so just keep in mind that we could be dipping closer to about this support around this 10.6 area before it tries to turn. For SoFi, we're making higher lows. We had a low here, we bounced, making higher lows so far. Nice accumulation so far, and I think that with this left shoulder, head, potential right shoulder as we're making higher lows here. As long as it does not lose 12.35, we're favoring a push towards the 13s. I think there's potential in this nonetheless. For AMD, excuse me, we have a nice setup. We're trying to make higher lows here. As long as we don't lose 102.5, we're looking, or 103, excuse me, we're looking like we're favoring that we want to go back up to about 110. If we lose 105, look for 103. If that fills us, we will turn back down. I will turn a bit more bearish if that happens. For now, there's no sign of that. We're making higher highs and higher lows. We're favoring a push for that 110 target. ARM is looking quite good so far. I like the fact that we're forming a nice accumulation. I want to see us break past 121. If that's the case, we're looking for an attempt to get back up to about the gap fill at 125. If we lose 115, we could turn back down, but I think this is favoring upside for now. For Coinbase, we're forming a bottom here around this 175 area. If we manage to break past 196, we're looking for an attempt for essentially 205. If we lose 183, we could turn back down, but we're looking for 196 as our potential target, so give it some time. For Amazon, Amazon has a triple bottom like structure here. If we end up breaking above 199, we're looking for an attempt to get back up to the 200s. If we end up losing 192, we're turning back down. In my opinion, we're completely range bound, going back and forth between 192 and 200. So there's not really much going on with this until we break one of those directions. There is potential to break out higher if we get some good news, but right now the FTC is pursuing cases against them, so we'll see how that goes. It's just range bound. Meta's flat. I need to see it get back above 593 to bounce for like the 600s. If we lose 580, we could turn back down. We're trying to base here, so look for 593 and a potential bounce after that. For Microsoft, we have a kind of like a double bottom like structure. I need to see us get back above 388. If that breaks, we're looking for the 390s. If we end up losing 382, we could be turning back down, but we're kind of stuck right here, so we're just trading sideways. I would like to see us break 388s to be more bullish, so we'll see how that goes. For Google, we have 165 as resistance, not to mention 168. If we end up losing 162, we could be turning back down as we're stuck in the middle. So we'll just have to see how it goes. We have a nice kind of like inverse head and shoulders. So we'll see if 165.73 breaks, and I think there's a good chance we try to push higher. For GameStop, we have a nice bullish divergence. As long as we're above 23.4, we're favoring a move back up for about 24.5. For AMC, we're forming an inverse head and shoulders as well. If we manage to break back above 3.04, we're looking for an attempt for 3.1. If we end up losing 2.95, we could be turning back down as well, so give it some time. For DJT, we're also in the middle, going back and forth between these levels. If we break past 20.34, we're looking for an attempt for 21.2. We're kind of stuck in between these levels, so I could see a small dip instead. The VIX is looking relatively weak as we're making lower highs here. We're going to be looking to see if 19.6 holds. Otherwise, it could be dumping even more. I want to see this get back above 22 to be bullish. Otherwise, the trend is a bit more bearish right now. So we're bearish looking. We need to get back above 22 to balance. We're not really there. This is still looking a bit more bearish, and we're favoring a move below. That's bullish for the stock market. The 10-year is in the middle, not really doing much. It's been dipping a bit thanks to Powell. And I think it's going to continue to downtrend. The dollar is flat. It did go up a little bit, but we're going to be watching to see how well it holds above 103.8. We'll have to reject and see a big move down as we have a slight bearish divergence. We'll see just to be safe. Anyways, my view of the market is this. Watch your levels for tomorrow. If we can't hold 564 on SPY, it's going to be a bad sign. If we break past 568, it's a good sign. My gut tells me there's going to be some kind of like either a consolidation move here or we just push higher. I don't really favor upside right now. I'm sorry, I don't really favor downside right now. Excuse me, guys. I don't favor downside. I favor upside a little bit more. So we have lots and lots of these option expirations worth of trillions, and we'll see what that leads to, at least for the markets. So just get ready. For now, my bias is in favor of upside as we're making higher lows. And with all the puts expiring, right, we have over close to like 4 million of them. There's a lot of these puts expiring. So I think that, the market makers may have a trick up their sleeves. I wouldn't be surprised if they try to push the market higher as a result. So we'll watch our levels just to be safe. I thank you all so much for listening. Have a good one and peace out.